So the key for me is continuing to watch this 19,500 level on a daily closing basis.
Hello everyone and welcome to the Daily Crypto. We are back with yet another Gareth Soloway video for you to enjoy, but before we get into it, let's take a look at the Fear and Greed Index for today. As of recording this video, the FNG index is at 23, same as yesterday. This is because Bitcoin has been trading sideways for a while now and hasn't made any impulsive move. Currently, Bitcoin and Ethereum are trading for 19,150 and 1,350 respectively. With that out of the way, let's continue with today's video.
Yeah, so a lot of this has to do with the dollar, right? So when you see the dollar continuing to stay at 20+ year highs and it continues to grind up, it just kills all risk assets. And you can actually watch on an intraday basis how every uptick in the dollar, you'll see the opposite occurring in the Bitcoin chart or in the stock charts of the S&P as well. So a lot has to do with the dollar. We have to keep an eye on rates. Remember, as interest rates rise, there are going to be a certain amount of investors that say, hey, listen, I could get kind of a risk-free return of 5% or 4%. Why am I risking my money in Bitcoin or in the stock market when I could lose 20 or 30%? So there's this give and take going on in the market as the market tries to gauge what the heck the Federal Reserve is going to do in this coming meeting. Are they going to raise 75? Is it going to be 50? Is it going to be 100? And again, the market is just trying to figure out the levels.
Bitcoin continues to trend lower because the dollar has been increasing in strength. Since they both are inversely related, Bitcoin and all other risk assets will continue to dump unless the US dollar starts to show signs of weakness. Moreover, the Fed rate hike has also made investors fearful because an increase in interest rates will lead to a fall in all financial markets.
Yeah, so you're right on that. So we have Bitcoin that flushed early today with the stock market. The stock market was down sharply this morning. It reversed because the dollar began to pull back. And amazingly, I mean, gold was down this morning and then gold reversed basically flat on the day as the dollar came in. And you can see Bitcoin rallying up as well. So the key for me is continuing to watch this 19,500 level on a daily closing basis. The reason why that's such an important level to me is if you go all the way back to the 2017 high, that is the high pivot. And that's kind of the level we've been dancing around for a long, long time. So as long as we kind of hover around that level, there's a small chance that Bitcoin can get some sort of bid if the dollar comes in, if the Fed gives some sort of dovish speak on Wednesday that maybe shows a pivot coming for interest rates.
Gareth says the 2017 high level is an important mark because it will decide where Bitcoin is headed from here. If we get some sort of a dovish outlook by the Fed, chances are we will see a rally in Bitcoin.
Yeah, so I think gold has been doing amazingly well. Number one, if any investor out there was fully in gold, they would be thrilled this year, right? I mean, they would be so happy to only be down 5% or so on the year. And the other thing to remember is the gold chart is only down 5, give or take a percent, but the dollar has gone up 15% on the year. So if someone told me that the dollar was going to rise 15%, I would say, oh, well, gold probably should be down 15% on the year at least. And the fact is, it's only down 5%, which shows to me it's relatively outperforming what it should be doing. And it tells me to also that you likely are having smart money accumulating, which is why it's not down as much. So I continue to be a huge bull on gold. I think, again, you know, people love to hate on gold, but in reality, it's performed well. I mean, take a look at the euro chart, the gold euro chart, or the gold yen chart. It's an awesome, if you were in those assets via those currencies, you'd be loving gold even more this year. But I think, again, the fact that gold is holding up as well as it is with such a strong dollar is a testament that it's getting ready for a big bull run.
Gold has been performing really well so far this year as it's down just 5%, as compared to other asset classes that have dropped more than 20%. Gareth believes smart money is accumulating gold at these levels, which is why we're seeing it perform better than it should. Overall, he is bullish on gold in the short and long term.
I do, I do. So I think Bitcoin still has another leg lower to 12 to 13,000. I think the stock market likely by end of year or early 2023 will tag the March 2020, well, the highs just before the March 2020 COVID collapse. So you're talking about the S&P downside to like 3,400 or so. The key for gold's outperformance is going to be when you hear the Fed pivot. The Fed pivot is going to be key because inflation's not going to be down to 2% or under, and it's going to tell you that the Fed is now more worried about the economy than about inflation.
Gareth Soloway is still sticking true to his belief that Bitcoin is going to 12 to 13,000. If the Fed increases rates drastically, then this factor could act as a catalyst that breaks Bitcoin's back and pushes it down into those levels.
It's just that idea. So the market is trying to price in how much more hikes they're going to do in terms of interest rates, how much tighter the dollar is going to be, the supply of the dollar. And what the market wants to see is it start to curl down, where instead of a 75 basis point hike after this next meeting, maybe they do 50 or 25, or maybe they go on hold. And what that's going to assume, that the investing public is going to assume that that means they're going to go to zero, and then eventually when the economy gets into a bad recession, they're going to start going back to quantitative easing again down the line. Now, it's not for a long time, but you absolutely will see that again when the economy starts to really tank.
Since investors are trying to anticipate Fed's next move, even the slightest leniency in rate hike could signal that the Fed has started to ease off and the markets are ready to push higher once again.
So, for the last year plus, I've been really a proponent of regulation, and the reason I am is that as much as we like the deregulation and kind of this independent currency type thing, if you ever expect big money to come in, and I'm talking about pension funds with trillions of dollars, I mean, just them putting 1% of their assets in Bitcoin would be massively positive for the price of Bitcoin. So I'm coming from the investor standpoint where I want to see the price go up. And the only way you're going to get that is if you get a framework of regulation and people actually know the rules, right? So one of the things in the stock market that I've learned over the years of trading is that the market doesn't necessarily care if it's a positive or a negative. They just don't like not knowing, right? They don't like that ability to not figure out what the rules are. So by getting regulation out there, you create a framework where these institutions can say, okay, now we can play in this field. We can play ball because we know the rules and we feel comfortable investing with our fiduciary responsibility other people's money. So I welcome, regulation. I think it's needed. You saw over the last 6 months bankruptcies and shady activities and all this, and investors honestly are scared of crypto in many situations. So I think you have to get this regulation.
As much as crypto enthusiasts don't want cryptocurrencies to be regulated, Gareth says it is vital in order for the crypto space to grow further. Once there is a proper framework in place, there will be a lot of large institutions wanting to get in, which will ultimately have a massively positive impact on Bitcoin's price.
I think Ethereum, right? So you have to look at it as the rally from the lows in June. It was about 100+%. And a lot of that was expectation of this merge coming. And really what we see, and we see this with so many stocks as well, is that people buy into these stocks on anticipation of great earnings, and then they report great earnings, and then people are like, okay, well, what's my next reason to own this? I'm up X amount of dollars. Let's sell it. Let's take profits. We'll revisit this in the future. And I think that's what's going on with Ethereum. As much as I love the merge, and I think what it will end up doing will be a positive for Ethereum, it still doesn't solve the immediate issue of the risk and the fear of crypto right now with the Fed being so aggressive. So you're going to see it come down here. I have a major technical level on my chart around $1,250. You can see it just kissed that level right down here coming from this pivot. If it gets through there, you could retest sub 1,000. But ultimately, again, you get down sub 1,000, and I think you start accumulating this for the long term very slowly because it could go lower. But again, you have to think about the thesis with the merge in the long term, but then understand that fear rules the day in the near term, and that's what we're dealing with the Fed right now in the strong dollar.
With the ETH merge having successfully taken place, Gareth says it is a buy the rumor sell the news kind of event, and investors who are up on their investment will definitely take some profits. This could lead to a short-term fall in Ethereum's prices, and we might even see it retest $1,250 or $1,000 level. Thank you for watching this video. Please drop a like and subscribe to our channel to keep watching educational content like this on a daily basis. See you guys in the next one.